6, 7. 6, 7. What's up, fellers? Going through the trade for today. There were 3 bangers that you could have taken. A couple of them a little better than others, but all still really good trades today. I made 67 $676.80 today. So we're gonna go through the trade. You know the rules, you know how it works, right? Everything that I went through to get to that point. So we're gonna go through it real quick, real fast. We'll go through all 3 of the trades that you could have possibly taken and the reasons why I didn't take some of these trades. Okie dokie. Let's go ahead and get through it. So first off, right, coming into the charts, we had PPI today. PPI this morning didn't really do much, so like I wasn't too worried. PPI was like this right here, yeah. So like it didn't do much. Wasn't too worried about that. Now, right off rip, right, we are inside of this giant bearish 4-hour. This one right here, right, and we're probably either going to continue back down or continue back up. And so what I was thinking, right, is that possibly we're going to probably come down and hit this discounted 4-hour regardless, right? Regardless of what happens, right? Because if we're going to be bullish, we're probably going to come tap equilibrium of this range, which is this discounted 4-hour gap, and then continue back up, right? Now, if we are not, we're going to trade through this, right? If we're bearish, we're going to just trade through it. So that's what I was thinking, but also at the same time, right, this looks pretty bullish. But I was thinking that we're at least going to get a retrace in here. So that was my essentially my draw on liquidity. Anyways, coming here on the 15-minute, we did end up having this bearish SMT right here, right, just barely, with this previous day high right here. We swept that out on ES, did not on NQ in London session. So bearish SMT right in the 15-minute gives us a little more confidence that we're going to continue back down. Now, the reason why I did not take this first trade you could have taken down all the way, rode that shit to the fucking discounted 4-hour, and that would have been an amazing trade, crazy RR. However, the reason I did not take this, we took out this London low value and we inversed a 30-minute. This looked like some AMD to me, right? Accumulation, manipulation down, swept out this key level, right? Also inside of that, this 4-hour gap as well. This 4-hour gap right here, right? And then it could be a continuation up. I did not want to take that trade, that short, because, boom, look at this. This looks like accumulation, manipulation lower, boom, distribution back to the upside. We had an inverse 30-second as well, and it looked like we were going to continue to ride that all the way up. And I thought we were going to come all the way up to these highs up here, which is the CPI candle. No, it's not. These highs right here, which is the PPI candle, which I thought was a potential of happening, right? I told my students that we could reverse off of London low, so be careful about it, right? So that is why I did not take this first trade. But you could have taken this first trade. You could have seen it a little bit differently, right? There was also, I believe, this 5-minute, right, that we retested into right there. Boom, get an inversion to the downside, take that, whatever, right? There was a 30-second inversion in one of these. You definitely could have taken that. However, I didn't like that at all. Just because we had another SMT here, as you can see, at that point when we had swept this out, we had a fat SMT with ES, and we are continuing to push up. So that to me looks like, okay, we're probably reversing back to the upside. I don't want to take that. Right, so that is why I did not take that trade right away there at the morning. And then, didn't get any other entries to take me down to my draw, unfortunately. But then we tapped into this 4-hour gap, right? And so now we're thinking, okay, watch for that reversal. We don't need anything else lower. Watch for that reversal. And I believe we did end up tapping into like some sort of 5-minute gap here as well. No, we didn't. But however, you still could have taken this trade just purely based off the fact that, okay, we have this 5-minute right here, right? So if we are going to continue bullish, if we're going to bounce off this gap right here, we're probably going to trade through this, right? If we're going to continue bearish, we're going to use this as a retracement and continue lower. So you could use this as your take profit, right? Because either way, bearish or bullish, we're going to tap into this gap and continue in whichever direction, right? So that's why, you know, targeting unfilled gaps is so fire, because you're gonna hit that level pretty much regardless, right? And so what you could have done here is targeted this high inside of this gap. That's a great draw on liquidity, right? Take this 1 minute inversion, boom, up to there, or you could have taken the 30-second, got a better entry. But in this case, you're not going to want to take the highest time frame inversion, which would be this like 2 minute and even probably a 3 minute, right? This 3 minute, because then you're already at your draw, right? Regardless of what you're going to do, you're probably going to hit that draw no matter what, right? Because you're not just going to, you know, come up here and then go back down. You're going to retest into the 5 minute and then continue, right? So in times like this, you can, you know, skew and vary from your strategy a little bit, because obviously you're going to tap into that regardless, right? So in this case, if I were to take this trade, I would have taken the 30-second just to give me that confirmation, boom, taking it up to this 5 minute or this high inside this 5 minute would have been a great play, right? So, you know, like an entry, I don't know where the 30-second would be, like probably here or something, up to here, right? Something like that. Boom, 2.5 RR, beautiful. Then the trade that I actually ended up taking today, I thought was the highest probability, right? We just traded down lower. If we were going to continue to the upside, we would inverse this 5 minute right here, right? If we were going to reverse completely off that, inverse that 5 minute. If we were going to continue bearish, we'd respect this 5 minute and continue back down. Well, what does it look like we ended up doing? Respected the 5 minute, right? We're actually about to trade out of it and inverse it right now. However, we're probably going to respect the 5 minute, right? And so that's what we're probably looking for. We end up coming back into here. It's the exact same thing as the last time, right? We have this. I'm going to take some of these. I don't want to delete that. Get rid of this. Get rid of this. It's the exact same thing as the last one, where you can target that unfilled 5 minute, right? It's the same thing here. We have this 5 minute gap, boom, right here, that we can target. This is bullish. Boom. See, same shit. So if we're going to continue bullish off of this, we're probably going to come down here, retest this, continue. If we're going to continue bearish off this, we're going to trade through it. So it's the exact same thing. That level is going to get hit no matter what, right? And so you guys have to use that to your advantage. You have to use unfilled and unmitigated fair value gaps, because that is how the market moves. Highs to lows, liquidity pools to liquidity pools, right? Fair value gaps are liquidity pools. You have to get that in your head, that fair value gaps are liquidity pools. No matter what, price is going to touch these higher time frame fair value gaps regardless, right? The same thing with this 4 hour in the morning. If we are going to continue bullish, we are going to retest this value and continue up. If we are going to continue bearish, we're going to trade through this. Either way, it's going to get hit. Find an entry to take you to that value, right? You got to think about it like that, right? So in this case, right, we had this 5 minute right here. Perfect, right? We're thinking that price, no matter what, is going to hit this level right here. Because if we're going to be bullish, we're going to respect this gap and continue up. If we're going to be bearish, we're going to trade through this gap. So I took a 1 minute inversion, just back to the downside, right off this little boom right here, this inversion, off this candle, stops right here, down to this 5 minute. Boom, simple. No, I put my stops up here. But so simple, bro. Okay, just straight down to there, and perfect low resting inside of this 1 minute gap as well, right? Lines up with a low. And what happens? We hit it in 2 minutes, right? Super simple. It's like a minute and a half. But as you can see, right, no matter what, I don't necessarily have a bias. I'm targeting liquidity pools. I don't have a certain bias that I'm looking at. I'm targeting those certain liquidity pools because they're going to get hit regardless. Right? They're going to get hit regardless. It does not matter of your bias. A lot of people will say, you know, don't marry your daily bias, and that's true, because no matter what, the area that I was targeting was going to get hit, right? You don't say I'm bearish today, right? You just say my draw on liquidity is this. Doesn't mean that we're going to be bullish or bearish on the day. On the daily, we're probably going to be bullish, but on the freaking 1 hour candle, the next 4 hour candle, we're probably going to be bearish because we're targeting that value. But that singular 1 hour candle that's bearish does not mean we're bearish on the day, right? Because there's 24 of them in a day. So target the liquidity pools, because they're going to get hit no matter what, right? If you have a super strong draw on liquidity, no matter what, that target is going to get hit bearish or bullish on the day. Like, it does not matter. Genuinely does not matter. All right, so that's why it's so important to actually target liquidity pools rather than just saying like, okay, I'm bearish or I'm bullish today, because you have no clue what that next hourly candle could look like. It could be something completely different, and you could get screwed over. But anyways, that is going to be it for today. I'm actually not going to be here tomorrow. I'm going to be on a plane. So there's a chance I'll trade. My flight lands right at market open, supposed to. So we'll see what happens. I might trade in the plane as we're landing. I might just not take a trade whatsoever, right? We'll see what market gives us and market conditions and all that. But if I do take a trade tomorrow, it'll be a little late in the day. So you'll see that later, but it might still happen. You know what I'm saying? So if I take a trade tomorrow, you'll see me. If I don't take a trade, you won't see me. That being said, ladies and gentlemen, happy Thanksgiving, right? Because I might not see you till Thursday, or I might not see you till Friday because I'm not trading Thursday. But happy Thanksgiving. Have a great rest of the week. Make sure to like, subscribe, follow, comment, all that stuff. Let me know if you guys took a trade today. Down in the comments below, how much you won, how much you lost. Have any questions? Let me know, bro. I'm there to help. And I'll catch you boys later. Peace out.